Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Wednesday, September 12th, 2012. There's a lot to talk about. There's a lot of charts to look over. So we'll start off with the usual S&P 500 E-mini futures. They're trading higher today by about 5.5 points to around the 1436 level on the E-mini futures. The one thing you have to say today is that the German court ruling came out around, I believe, 4 o'clock this morning. And it looks like they ruled in favor of the European Stability Mechanism, better known as the ESM. The court did state that they will cap German contributions at 190 billion euro. So that is what Germany will be on the hook for. They will participate to the tune of 190 billion euro, and we'll see how the market reacts. So far, the markets are reacting positive. The one thing I have to say, though, everything is inflating off of the news. It's not a big move up. I think a lot of this news was already baked into the cake. It was really waiting. People were really waiting to hear what the German court would put in place as what strings would be attached. And it looks like that 190 billion euro maximum contribution is the main thing. The other thing that the court said was that they would approve a higher number as long as it was passed by Parliament. So, again, it sounds almost like the U.S. debt ceiling. We have a debt ceiling, but it constantly gets raised and raised and raised, and that's kind of the way it works. So, again, positive news if you want bailouts for the European Union, and it looks like that's going to happen. So Mario Draghi, everything that he stated is on its way, and we'll see how Germany reacts down the road if and when they are on the hook for a lot of this debt service. All right, so let's take a look quickly at the European markets. Really, they're trading higher across the board, but nothing tremendous. You have the German DAX up about 0.5%. You have the FTSE MIB, which is Italy, that's up about 1%. The IBEX 35, which is Spain, up about 0.5%, and the French CAC 40, which is up about 0.25%. So, decent little pop there, but nothing all that tremendous. So we'll see how this plays out going forward. Last night in Asia, you had all of the Asian markets decently higher. The Shanghai was the weakest, only up 0.3%. So everybody's waiting for more stimulus talk out of China, but nonetheless, the Shanghai was still positive. So everybody's sharing things there. Let's take a look at oil and gold. We'll start off with the usual gold this morning. Spot gold is trading higher by $9, and that's up to $1,744 an ounce. Let's take a look at the GLD, which should be getting a decent little pop off of that. And sure enough, the GLD is trading right at 169. Closed basically at 168 yesterday. So you're getting a nice little $1 pop in the GLD. And again, if the dollar moves down later, GLD can trade higher. We can't rule that out. That's in the cards now, especially with all these quantitative easings going on. Tomorrow, the Federal Reserve is scheduled to announce its quantitative easing plan. I think the market has that baked into the cake, so we'll see how that plays out. But again, it's all about inflating the system with a lot of cash, and that ultimately pushes stocks higher. Let's take a look at oil this morning, because oil is trading higher by 28 cents to $97.45 a barrel of light sweet crude. That is the type of crude that we use here in the United States. And if you take a look at the USO, which is a good barometer, USO was trading above 36.30, now pulling back, but still higher on the session, around $36.16. So a little bit higher than yesterday's close, which was $36.11. Traders should keep an eye on the dollar. The dollar has been absolutely slaughtered recently. If you take a look at the daily dollar chart, you can see here from the late July, the dollar has just been mugged all the way down to the 79.66 level, breaking the $80 level yesterday. That is a big decline in the U.S. dollar index. So keep that on watch. It's over 5% now in just a little over a month. So about 7 weeks, 6 weeks, the dollar has declined over 5%, and sure enough, you got a big rally in the stock market. So that's kind of the way it works. If you take a look at the intraday chart of the dollar, you'll see that it's off the lows a little bit, but nonetheless, it has just been absolutely mauled, and it's still down on the U.S. dollar index futures, down 17 cents to 79.66 per contract. So again, dollar is lower, markets are higher, and we'll see how it plays out. I think all eyes are going to be on the Federal Reserve now. They want to see what the Fed is going to do as far as their quantitative easing, and we'll see how the markets react tomorrow. So far, the markets just love the bailouts. All right, let's talk about some stocks in the news. Enough about this bailout talk. Let's go to MDDW. I don't even know the stock, but I do see Mediware Information Systems. Stock is being bought out by a private equity group. $22 a share. Don't touch it. If you own it, congratulations. Take profits, or at least put your stop loss right underneath the low of the day. But this should just trade sideways from now on until the finalization process is done. But right now, great move on it. Taken over by private equity. Let's take a look at Chesapeake. That's in the news. They sold some assets, I believe, to Chevron and also to Royal Dutch Shell. Chesapeake catching a nice bid to 21.20. A lot of resistance up here. I would not chase this thing higher. I know they sold, I think, $6 billion worth of, maybe a little bit over $6 billion worth of assets. Don't chase this thing. There's just a ton of resistance around this 21 area. I don't have a great level for a short or anything like that at the moment. I think you're just better off just leaving it alone. But nonetheless, a pretty good little morning pop. But I think that's all it is. I'm not seeing any great move. There's a lot of resistance around the $21.25 level. After that, there'll be a lot of resistance around $22.90 to $23. So keep that on watch. But I would not chase Chesapeake here. It's been up, and there's a ton of resistance at 21.25, and then again at $22.90 to $23. So a lot of resistance in both of those areas for Chesapeake. There's not much I would just do with it at all. I would leave it alone. Steel Dynamics, I think, cut their earnings forecast. Stock is getting hit a little bit. Closed yesterday at $12.28. Today it's trading at $11.89. I do have some support levels because this is a possible bounce candidate just for the fact that there's so much inflation being created. Traders may want to watch the $11.42 level, $11.42, and then $11 even number, and then you're going to have to look at $10.11. So there's going to be support levels all the way down to those areas. Obviously, if it got down to $10, $11, or $10, that looks like a really, really desirable area to pick it up for a quick bounce. But all the levels could give you some small bounces today. Let's take a look at Facebook. Facebook is getting a nice little pop today after the Mark Zuckerberg interview. Right now, I just don't see, really any real conviction in this thing, though. I'm not saying it can't trade higher. It certainly could. I guess you have a little resistance around this 2150 area, but it could trade higher. It's just not a great stock as far as the chart is concerned. So I'd still be careful with it here. I don't know if it's really done going down, or if this is just a little prop job of a bounce with the Zuckerberg interview, and we'll see how it trades out. But I'd be real careful with Facebook personally. I would not be looking to touch it right now. I want to take a look at PCAR. So this is Packard Inc. The stock this morning has gotten hit a little bit, but it's now rebounding. So again, it's cutting its losses. You can see here a big gap down, but now it's bouncing up a little bit. Let's just find a good support level. If it gets down to around the $38.59 level, there's going to be some support there. And if it gets down to $37.80, there'll be more support there. That's really all I'm seeing. After that, it's 37. I'll make it 36.90, and then it's $35. So those are your support levels there for PCAR. Let's take a look at this GCOM. I'm not sure about this one. I've never seen it. It's a real light volume stock. This is a big gap down, though. This is what we call a strong gap. The stock was trading yesterday at $13.30 on the closing price. Today it's trading at $10.95. Right now, I'm going to say this thing could go back down to $10.50. After that, it looks like $9.50, $7.82, 708. This is a strong gap down. It's a thin name. Be very careful with this one. This can go lower, so be very, very careful with this one. In fact, it doesn't even have a lot of volume, so you may want to avoid it altogether. But if you're a risk taker and a little bit aggressive, those are the levels that you want to watch for. Now, Apple is scheduled to unveil its iPhone 5 today. We'll see how that plays out. Right now, Apple is up about $5 at the moment, so good little pop for Apple. But the stock has been showing some weak signs lately, but we'll see how it reacts after the unveiling of its iPhone 5. I think that's going to be out at about 1 o'clock this afternoon, from what I understand. But we'll see how that shakes out and plays out a little bit later today. But again, Apple unveiling its iPhone 5. Maybe it has a little run up into that. I don't see anything really that desirable for Apple right now, personally. Okay, so we'll leave it there. Again, futures are trading higher by about 5.5, 6 points. And nonetheless, markets are up after that ESM. Tomorrow is the highly anticipated Federal Reserve meeting, the FOMC announcement. They're going to keep interest rates at 0. Maybe they'll extend it out to 2015 is the rumor. They also are scheduled, most traders are anticipating a quantitative easing of some kind. So we'll see how that plays out tomorrow. With that said, everybody, have a great trading day. Have a great morning, great afternoon, and we'll see you on the charts tomorrow. Take care, everyone.